So Greg, I want to talk a little bit about the buzzword of the moment, which of course is smart beta or strategic beta. I think there's a whole host that we could come up with. Let's unpack this term a little bit. Is it synonymous with factor investing?
You know, I think back to all the different terms that have been thrown around at parties in the last 20 years. Fundamental indexing, smart beta, factor investing.
What parties do you go to?
Yeah, not the ones you'd want to be
at. The same one as the four of us, probably.
The reality is we're all really talking about the same thing. I think some of us prefer to talk about it in slightly different ways. At our firm, we prefer to talk about the factors than the betas. The beta is really the sort of the sensitivity that your portfolio has to the factor. That'd be the way I'd describe it. Whereas it's really the factor that we're talking about. But in the end, we're all really speaking the same language. I think these are predominantly marketing terms, and I don't know which of them stick. But I do think we're all really talking about the same thing. It's what we've been talking about. It's identifying the characteristics or sources of risk and return that drive the cross-sectional differences of security returns across markets.
To be precise.
To be precise. And but the other thing is we also have to recognize is that these things work differently in different parts of the world, and in different sectors and in different asset classes. For example, momentum worked quite well in growth stocks, but it doesn't really work very well in value stocks. And I could give another 20 examples like that. So, different factors work differently in different places. But, whether we're talking about fundamental indexing, smart beta, dividend tilt, small cap, these are all various forms of factor or smart beta investing, in my opinion.